In 2025, Los Angeles County was ravaged by two catastrophic wildfires, the Palisades and Eaton fires, leaving entire neighborhoods in ruins. The fires swept through the city with a ferocity never before seen, fueled by months of drought and record-breaking heat. Flames leapt from hillside to hillside, consuming everything in their path and turning once thriving communities into smoldering wastelands. The Santa Ana winds turned minutes into a race for survival, forcing families to flee with nothing but the essentials. Streets became choked with traffic as panicked residents tried to escape, clutching pets, photo albums, and whatever they could carry. For many, there was no time to say goodbye to the homes they'd built over a lifetime. 22 lives were lost, and over 12,000 homes were reduced to ash, erasing decades of memories and stability. The devastation was total. Schools, parks, and local businesses vanished overnight, leaving behind only blackened foundations and the haunting silence of loss. The financial toll soared past $50 billion, but the true cost was measured in shattered lives and displaced families. Communities that once bustled with laughter and activity now stood empty, their residents scattered and uncertain about the future. Survivors faced a new battle, navigating insurance claims, mortgage payments, and endless bureaucracy while living in temporary shelters. The sense of displacement was overwhelming, as families struggled to find even the most basic comforts in crowded gymnasiums and makeshift camps. The dream of rebuilding was quickly overshadowed by the harsh reality of dealing with banks and insurers. Promises of quick assistance faded into months of paperwork, delays, and denials, leaving many to wonder if they would ever return home. Many discovered their financial partners were more obstacle than ally, enforcing rigid policies that ignored the scale of human tragedy. Instead of support, survivors encountered red tape and indifference, deepening their sense of abandonment. Families weren't just rebuilding homes, they were piecing together their lives from scratch. Every day brought new challenges, from salvaging precious keepsakes to comforting children who no longer recognized their own neighborhoods. The struggle shifted from escaping flames to fighting corporate indifference. For many, the trauma of the fire was compounded by the cold calculations of lenders and insurers, who seemed unmoved by the scale of the disaster. As weeks turned into months, frustration grew, and hope faded for thousands still waiting for relief. Temporary shelters became semi-permanent homes, and the uncertainty of the future weighed heavily on everyone. The crisis exposed a system unprepared for disaster, leaving victims to fend for themselves. Volunteers and local organizations did what they could, but resources were stretched thin and help was never enough. It was this mounting desperation that finally drew the attention of the nation's highest office. The eyes of the country turned to Los Angeles, demanding answers and accountability from those in power. The story of Los Angeles became a warning and a call for change. In the ashes, a new resolve began to take shape, as survivors and advocates demanded a future where no community would be left so vulnerable again. Mounting outrage from wildfire victims reached Washington, D.C., prompting President Trump to act. On April 23, 2026, he announced a federal investigation into how banks and lenders were treating those who lost everything in the fires. Using Truth Social, Trump called out Wells Fargo by name, demanding banks treat fire victims very fairly and well. His message was clear: compassion must override contracts in times of disaster. The president's vow signaled a shift. Federal scrutiny was coming for the financial sector. For thousands of families, this was the first real hope that someone in power was listening. The question now: would action follow the words? President Trump's announcement followed a pivotal meeting with LA Mayor Karen Bass and Supervisor Catherine Barger. On April 22, they traveled to Washington, urging the president to pressure banks and insurers to help fire victims. They described families trapped in red tape, unable to rebuild or move forward. Their plea used federal influence to force financial institutions to show flexibility and compassion. The meeting was described as very positive, raising hopes for real change. By elevating the crisis to the national stage, LA's leaders set the groundwork for federal intervention. For fire victims, the nightmare didn't end when the flames died. Many were forced to keep paying mortgages on homes reduced to rubble, while also covering the cost of temporary housing. Banks offered little relief, short deferrals with confusing terms, balloon payments, and relentless demands. Families drained savings and took on debt, caught between inflexible lenders and mounting bills. The question, should banks enforce contracts when disaster strikes, or show humanity? Advocates argued for compassion. Banks cited regulations and shareholder obligations. The standoff left thousands in financial limbo, fueling calls for federal action. Insurance, meant to be a safety net, became another source of anguish for wildfire survivors. Many faced endless delays, denials, and demands for impossible documentation, itemizing possessions lost to the flames. Underinsurance was rampant, payouts fell far short of rebuilding costs, as construction prices soared. Without insurance money, families couldn't pay off mortgages or start over, trapping them in expensive temporary housing. The cycle of slow insurance and unyielding banks left victims powerless. This systemic failure fueled demands for federal intervention, not just with banks, but insurers too. Behind every statistic is a family struggling to survive. These are not just numbers on a page, but real people whose lives have been turned upside down by disaster. Their stories reveal the true cost of financial hardship, one that goes far beyond dollars and cents. The Martinez family, after losing their home, faced months of insurance delays and relentless mortgage notices, stress that tore at their health and relationships. Each day brought new uncertainty as they juggled paperwork and tried to comfort their children, all while living in temporary accommodations. Retired teacher Sarah Jenkins lost her paid-off home, only to find her insurance payout couldn't cover rebuilding or rising property taxes. The security she had worked for her entire life vanished overnight, leaving her to navigate a confusing system with little support. Young families faced bankruptcy, forced to choose between paying for a destroyed home or feeding their children. Many were left with impossible choices, sacrificing their future to survive the present. The psychological toll was immense. Parents felt helpless, communities fractured, and hope faded. Anxiety and depression became daily companions as families struggled to find a path forward. Neighbors who once shared barbecues were now scattered, each fighting their own battle with faceless corporations. The sense of community that once brought comfort was replaced by isolation and uncertainty. Victims weren't just numbers, they were grieving, displaced, and vulnerable. Many lost not only their homes, but also their sense of belonging and security. The lack of empathy from banks and insurers turned a natural disaster into a prolonged human crisis. Instead of support, survivors often faced indifference, bureaucracy, and endless delays. These stories fueled public outrage and demands for government action. Communities rallied together, determined to make their voices heard and push for meaningful change. The call was clear: protect the vulnerable and restore dignity to those who lost everything. Only by recognizing the human cost can we hope to rebuild lives and communities with compassion and justice. The Palisades and Eaton fires struck different corners of LA County, but their devastation was universal. These blazes erupted with terrifying speed, fueled by relentless winds and bone-dry brush, leaving entire communities with little time to react or prepare. The Palisades. Fire tore through coastal hills and affluent neighborhoods, sparing no one. Mansions and modest homes alike fell to the flames. Residents watched in disbelief as the fire leapt from house to house, consuming decades of memories and hard work in mere hours. Simultaneously, the Eaton fire raced down the San Gabriel foothills, catching families off guard and overwhelming firefighters. Many were forced to flee with only the clothes on their backs, as the firestorm advanced faster than anyone could have imagined. Together, the fires claimed 22 lives and destroyed 12,000 homes, triggering a housing crisis and $50 billion in losses. The aftermath left entire neighborhoods unrecognizable, with streets lined by the charred remains of what once were vibrant communities. The disaster united victims from all backgrounds in a shared struggle against bureaucracy and corporate indifference. Strangers became neighbors, supporting each other through the uncertainty and heartbreak that followed. Insurance adjusters and mortgage lenders became the new adversaries. Survivors faced endless paperwork, delays, and denials, compounding their trauma and making recovery feel out of reach for many. The sheer scale of the crisis made it impossible to ignore. Emergency shelters overflowed, and the need for aid far outpaced the resources available, leaving thousands in limbo. Thousands of voices demanded accountability and help from every level of government. Protests and community meetings became a daily occurrence as survivors refused to be forgotten. The fire's legacy was not just destruction, but a powerful call for systemic change. Grassroots movements emerged, pushing for reforms in disaster response, housing, and climate policy. Los Angeles became the epicenter of a national reckoning, as the nation watched and wondered how to prevent such devastation from happening again. With the president's promise, all eyes turned to Washington for solutions. Federal agencies like the Treasury and CFPB could investigate banks' treatment of fire victims, demanding transparency and accountability. If wrongdoing was found, hefty fines and new emergency rules could follow, including a moratorium on mortgage payments and foreclosures for disaster victims. Publicly shaming uncooperative banks, as Trump did with Wells Fargo, could pressure institutions to change. The goal: set a new standard for disaster response. Automatic payment pauses, streamlined loan modifications, and better coordination with insurers. The LA crisis exposed a system that prioritized contracts over compassion. Federal intervention could create a more humane, resilient model for future disasters. The stakes: not just recovery for LA, but a blueprint for the nation. The aftermath of the LA wildfires became a test of America's values. Would corporations show responsibility beyond the fine print, or cling to profit over people? President Trump's investigation elevated the crisis to a national issue, offering hope to thousands. If successful, it could set a new standard for corporate compassion in disaster. The actions taken now will shape how future victims are treated: support or indifference. For LA families, home is more than a building, it's security and belonging. Rebuilding requires financial stability and community support. The nation is watching, hoping this tragedy leads to a more compassionate, resilient future.